In this week's episode of the Stockscores Market Minutes, we're going to look at the importance of trading surprises, what that means, and how to take advantage of it. I'll do my regular weekly market analysis, and then I'll look at the day trade of the week on SAVA. All right, welcome to the first episode of 2020. I've had a little bit of time off, but now back at the markets, and it's been an interesting time over the holidays. We've got some key charts to look at, which I'll get into in a moment. First, I want to talk about the importance of trading surprises. This is really my main method for trading the market. I look for stocks that have been quite boring, not really a lot going on, and then start to trade abnormally with abnormal price and abnormal volume. Stocks that surprise the market with positive business changes can really make quick moves higher. Now, the best way to find these stocks is, again, to look for that abnormal price and volume behavior from what was previously very quiet, boring trading. Now, you can apply this method to day trading, swing, position trading. Let's look at some examples. Starting off, this is what I would consider to be a swing trade candidate. The stock was very boring through here, and then it came alive. You can see the volume starting to come in. That's because the market was starting to speculate on whatever this company was doing. Now, I assume it's some kind of biotech company. I don't really know, don't really care. What I know is that abnormal trading activity that started early in December then really telegraphed that big move where the stock has gone from being around $1.50 to almost $10 now, and that all started with that abnormal activity. Now, we can do that on a longer term time frame as well. This is a weekly chart of a stock that started to behave abnormally here, but prior to that was pretty boring, and then it came alive, the volume started to come in, and you can see over the ensuing few months that stock has moved sharply higher. When we look at the day trade of the week, I'll show you another example that fits with the day trading situation. All right. Let's get into this week's market analysis. And because of the political turmoil with Iran and the US in particular, we've had some volatility the last few trading sessions. Generally speaking, the holidays were fairly quiet, as they often are, with low volume. You can see the really low volume there. But in the last couple of days, we've seen a pickup in volume and also in volatility, a lot more movement compared to what we saw before. So that shows that the market is still a little bit uncertain because of what's going on politically. However, the cycle of rising bottoms has not been broken. We're essentially still in an optimistic market, just a little bit of turmoil, a little bit of short-term sideways trading, and so I think a little bit of caution is deserved, but not really a big deal yet. Now, looking at the longer-term chart, you can see here the weekly upward trend line is still well intact, and although we closed below the open last week, we haven't broken any upward trend lines, so I remain bullish longer term. Looking at the Russell 2000, which of course represents small cap stocks, and again, a little bit of quiet sort of almost profit taking the last couple of weeks, but not really anything significant. Upward trend lines have not been broken. We haven't rallied into this level of resistance yet, and so I still think the upside is there, and therefore remain a bull, but perhaps wait for the market to move to new highs from the past couple of weeks, moving above those highs. Moving on to the Canadian markets, the TSX, a little bit more volatility with some pessimism here. You can see the falling tops. That upward trend line was broken. This, of course, is the short-term 30-day, 60-minute chart. So there's a little bit of cause for concern with the Canadian market getting some pullback in the last little while. Now, we've seen a moment that the Canadian dollar rallied, and that actually makes these Canadian stocks more expensive, which sometimes can hurt what people will pay for them, and we perhaps see a little of that coming into effect in the last few trading sessions. However, looking at the longer term chart, still not anything to really be too concerned about. The upward trend line is still in place. We are essentially just trading in a little sideways pattern underneath resistance, nothing to be overly concerned about until that upward trend line gets broken, which it has not happened yet. So I remain long term sort of on the bullish side of neutral on Canadian stocks. Looking at the TSX Venture, we had a nice little jump the last couple of weeks, and again, a lot of that I think to do with the mining space getting a little bit of revival, and essentially we're holding the lows, which was support from last year this time. So we basically retraced back to the December lows of last year, and now in 2019 hit those lows again and bounced off of them, and therefore starting to see some good signs here, but there's still no build of optimism. We don't have any rising bottoms building yet, and so I still think you need to be fairly selective about what you trade on the TSX Venture. There's some pockets of strength, but in general, the speculative investor isn't real strong yet. All right, so moving along to the currency market, and you can see here an important move for the US dollar. We have talked about the build of this falling top for the last little while, and there you can see that falling top, and then we broke the upward trend line, and that started some selling pressure. So we've retraced back to some support, and we bounced off of that last week. Let's see if that holds. I think you need to be a little bit bearish on the US dollar right now. The market action is saying that the sellers are getting a little more motivated after really being strong for 2 years on the US dollar, and so I recommend some caution with that. Now, of course, with weakness in the US dollar typically comes some strength in the Canadian dollar, and there you can see that build of a ascending triangle. We're starting to move through that resistance. Still have lots of resistance to move through from past highs, but it does seem like the market is turning for the Canadian dollar, and of course that will be largely dependent upon commodity prices. We'll talk about that in just a moment. And on to interest rates, you can see interest rates fell a little bit last week. We know that because the bond market went up last week. So if bond market prices go up, interest rates go down, but still not a major move. Essentially, we're in a low interest rate environment, not a lot of volatility. We've been pretty stagnant sideways trading the last few months. All right, now on to commodities. And this is where I think some of the excitement has come in the last couple of weeks. We see that break of the flag pattern, break of the flag pattern right here. I could draw a line across those tops. We've broken that flag. We had a big move to the upside last week, but volume pretty light. And so I think it's a little bit of flight to safety with some of that political turmoil. I don't know that it's a real strong positive, whether you want to initiate new positions on this, but I think if you do have some gold stocks, we are finally seeing some life in them. You know that I've been relatively complacent about gold stocks the last few months because of that sideways drift lower. And looking at the oil market, of course, we broke the downward trend line. I talked about that, I think, in my last Market Minutes video, and we're getting a little bit of upside. Nothing dramatic. You can see volume very light coming into this resistance. I don't expect great things from oil yet, but it is at least going in the right direction. And so individual oil stocks could start to do well if they have good fundamentals to support it. However, in general, I don't think that the oil market is going to be really strong yet, maybe soon. But for now, I think you got to still be quite selective with oil stocks. So finally, the fear chart, really no fear. We had a little bit of a blip in the last few trading sessions, but we're pretty much still stuck in that downward trend for fear. Investors, even though there was a little bit of political turmoil, they're not too worried about stocks. And so we don't really see a major reason to jump out of them yet based on the VXX. All right, so my ratings then, bullish long-term for US stocks, but a little bit concerned short-term, so I've dropped my rating to neutral. Canadian stocks, I put neutral on both time frames. I mean, the long-term time frame is a little bit on the bullish side of neutral. Gold, I'm bullish both time frames. Oil, bullish both time frames as well. So international political tension has brought some added volatility to the stock market, and that may deteriorate some confidence early in the year. The greatest effect for that political tension has been felt in the currency and commodity markets, with gold and oil building some upward momentum. Of course, weakness in the US dollar makes it easier to buy gold and oil, and we're starting to see that. And relatively speaking, stock market fear is still low. All right, let's get into the day trade of the week. And this is just another example of how a stock can really be boring and quiet, and then it comes alive with abnormal price and volume, and that telegraphs a big move. So this is a stock that had a really strong move on Friday, and it was also the stock that I featured at the top of this video based on the daily chart, but you could also see on different shorter term time frames you have opportunities as well. So what I want everyone to notice is how volume really picked up around that time, around noon on Friday's trading session. And we had our action candle here, which triggered the trade alert, which people that participate in my active live service will know all about. And the stock made a really strong move. For $100 of risk, it only required a position of 410 shares, which was $3,020 position. But of course, you probably can margin that. Perhaps some brokers would limit margin because of the volatility of the stock. But if so, you got a margin of about $1,005 of capital required to carry that position. Now, the trade ultimately finished the day at 9.5 reward for risk, which means for every $100 risk, you had $950 gain, requiring $1,005 of capital. That's an awesome 94.5% return on a one-day hold, showing the power of finding those stocks, trading abnormally, surprising the market, and that's really what I suggest everyone focus on, whether you're a long-term position trader or a short-term day trader or something in between, a swing trader. It's a great way to approach the market. All right, well, that has been the Stockscores Market Minutes for January 6, 2020. That's not right, 2020. I'm going to have to take a little time to get used to saying that one. Have a great week in the market. Trade well, subscribe to the channel, hit the like button, leave a comment, do all those good things. We'll see you next week.